Good morning, it's Joe Neighbour from Signal Centre, and this is the latest technical roundup on cryptocurrencies for you all today. It's been a tough few weeks on the cryptocurrency space, and yesterday we saw quite a significant move in terms of volatility across riskier assets. We did see some support coming for Bitcoin later on in the session, but in terms of latest headlines, they do remain under pressure, particularly yesterday in the European trading session, with Bitcoin sliding to lows of around about 33,000. Risk appetite deteriorated further, and equities were subject to further selling. Bitcoin did, however, demonstrate some resilience after the New York Open. But we do appear to still be under a bit of pressure. So I'm just going to dive into the charts and look at Bitcoin across multiple time frames to give ourselves a little bit of a view on what could potentially play out in the cryptocurrency space over the short, medium and long term. So starting off with the weekly chart here on Bitcoin, and as we can see in the sort of shorter term time frame, we are under pressure. We're trading in a bit of a downtrend, and importantly, what I like to use on the longer term time frames is the Fibonacci indicator, just to give us a view as to where the key levels may be from a Fibonacci perspective. So looking at the lows from March 2020 up to the highs that we posted in November 21, we are seeing that the price is in and around the 50% Fibonacci retracement levels. This is typically, a well-watched area of support at, and that comes in at 36,429. So we're in and around that level at the moment. So while we continue to hold around that zone, there is potential for dip buyers to step back in and for higher prices to be seen. So on the weekly time frame, it still looks as though we are trading in a decent uptrend. But one thing I would caution is that we are seeing this kind of rounding tops take place on the longer term chart. So maybe we're in the process of forming quite a large top here on the price of Bitcoin, and we're likely to see more consolidation or sideways price action take shape over the coming weeks and months. So let's drill down into the daily chart now. So again, this just brings this downtrend into more focus from the highs that we posted around about 69,000 back in November. As you can see, price has been contained by that downtrend ever since. Now we go again to refer to this 50% Fibonacci retracement level at 36,429. Yesterday we saw an exceptional range really on the Bitcoin chart. We saw lows down towards or below 33,000, but we actually closed in positive territory yesterday above this 50% Fibonacci retracement level. So that is a strong indication that there was willing buyers yesterday in and around this drop, which signified that maybe we will see a bit of a rally to the upside. I think the key level now to watch is this 39,600 level. As you can see here, highlighted by this horizontal blue line, we've got these lows from September 21. We've also got these lows from January this year. So into this zone, we are seeing resistance potentially forming, and it'll be interesting to see what sort of reaction we get from Bitcoin in and around this zone. If we see the sellers step back in, then it's probably just confirmation that we're going to see a continuation lower within this short-term downtrend. And then we can start maybe looking at levels that haven't been seen for some time. Earlier in 2021, we saw the 30,000 level get a good testing by the market, and that was really the floor for the price. So maybe a retest of that kind of zone, we can't rule that out in the next coming weeks and months really. So we saw a number of tests of that level between sort of May 21 to July. And we've also got a 61.8% Fibonacci level at 28,742, which was tested back here in June. So this is the real key sort of area on the downside. I think if this level holds, then we will see new buyers step in for Bitcoin. That will be a really sort of nice floor for dip buyers to look at. If that fails to hold, then the picture starts to look a little bit more concerning, and we actually have to go back to levels seen in 2017 to focus our attention, which is below 20,000 on Bitcoin. So obviously it's got a long way to go before it gets down to that sort of region, But if the price continues to be put under pressure, it's something that we can't rule out. Just quickly going to move on to Ethereum to have a quick look at that. As we can see yesterday, a really big range on the price, but this did actually close negative, so it failed to perform as well as Bitcoin did yesterday. We've got this key resistance now at 26.51 on Ethereum, which we expect will maybe contain prices in the short term. Like Bitcoin, we're trading in a downtrend, so any move to the upside at the moment is likely to be met with fresh selling interest. The corresponding level to that 30,000 level on Bitcoin for Ethereum comes in at 1728. As you can see, these key lows that we posted throughout 2021. So if we continue to see pressure build on the selling side for Ethereum, then this is the kind of zone that we'll be looking for prices to test over the coming weeks. So overall, it looks like cryptocurrencies are set to remain pressured, and obviously they're being impacted by what we're seeing elsewhere in financial markets, particularly riskier assets like equities. So do be careful if you're trading. At the moment, the bias sadly is on the bearish side of things. So do be careful if you're trading and ensure you use risk management when you do. Hopefully that was insightful. I'll be back next week with a further roundup on cryptocurrencies. And until then, trade safe. Goodbye.